Today's number is 4,000. Why? Well, it could be that people are losing faith in the system faster than we even thought. And our favorite trade of the last 2.5 years is going absolutely ballistic. But could this just be the tip of the iceberg? Dark pools are on the rise from Wall Street, and we're starting to see huge options commitments at a critical zone. Positive gamma or negative? Are we going to sell off in September? And many other questions answered in today's video. So let's break down what Wall Street are doing and not what they're saying. Stocks, commodities, and cryptos. We've got a lot to discuss, guys. See you in a moment. Well, welcome back everybody to The Daily Show. My name's Thomas Atkinson, and in today's video, we have a lot to discuss as always. What's going on in the macro world? What about the data flows? And more importantly, it could be all down to Wall Street's biggest moves of the last couple of sessions. We saw risk on in sectors that weren't that hot only a few weeks ago, and it looks like things could be heating up into September. But I want to discuss with you first off a really damning statistic on the economy. And this is where we're going to have a difference between the economy right now and actually the market itself. And remember, it's very important to be able to delineate which one you should be trading, which one you should be investing in, and of course, what you actually need to be doing in the future. So first up, a statistic we've never seen before. Even during the depths of the global financial crisis, we did not see subprime auto loans this high. A new all-time record. 60-day loan delinquency rates are absolutely skyrocketing on cars across the US markets. And I'm sure this is happening in pretty much every country in the world right now. Why? Well, people just absolutely overcommitted themselves on loans back in 2022. And this is in broader daylight to what we've already been discussing through many other basically debt-fueled markets, whether it's from people refinancing their houses and then actually borrowing against them and spending that money, or it's even people just saying, you know what, this car, take it, I don't want to know about it, and going bankrupt. It seems like there are problems in the economy itself, and it's showing up, of course, in the jobs numbers. Now, it's not actually that you're going to necessarily lose your job right now that's the problem. It seems to be, if you have lost your job, how difficult it is to get one back. Another record since the start of this survey has just come through, and it's now easier actually to keep your job than it is to, of course, go and find a new one. And this is a big difference to where we were only a few years ago. Remember when everybody was saying, please come to our company? Well, those days are absolutely over. From 2013 to all the way to now, we have not seen a jobs market quite like this one, even during COVID, during the 2020 levels. So there's clearly a weakness in the markets, and this is showing up as a lead indicator through the JOLTS and construction spending reports. Remember, we've already announced this basically about a week ago on the channel. By the way, if you're new here, welcome to the channel. Make sure to subscribe, hit that bell icon. We cover markets like this, stocks, commodities, and cryptos every single day. But this is a really big statistic because, of course, when construction people stop leaving their jobs and looking for new ones, it is a concern. It means that we're very smart out there, guys. We know that the jobs market is starting to weaken, and we know also that it may be more importantly to keep security right now than to possibly go out there and try to find something new. Why? Well, it's probably to do with AI and also just to do with a weakening economy. But we do know that the jobs numbers are now the only thing that the Federal Reserve is thinking about. Basically, the Fed usually has a dual mandate. Inflation, don't worry about it. Now it's all about the jobs numbers. So will they be cutting? The answer is quite simply yes. And you'll see how that may play out to either a huge advantageous level in the markets over the next 6 to 12 months, or possibly even the beginning of a recession. So what are Wall Street actually doing? Well, you may think based on those jobs numbers, based on what we're seeing in the economy, that they'd be like panicking. Well, they're not. They're absolutely buying into pretty much the American consumer. You can see here consumer discretionary stocks are going back up again. Now, XLY is a bit of a weird one because it's made up of course, a very heavy concentration in two stocks. One of them being Tesla, which is now, by the way, just all they're going to talk about is AI and robots and nothing about cars, I would think. And the other one is, of course, what we've got going on with Amazon, which with the recent tariff changes on the weekend seems to be potentially getting a bit of flows. So this is leading into quite a large rally in the most important sector for 1/3 of the US economy, which is obviously consumption. Now, why does this matter? Well, we track this using codes such as this: XLY, consumer discretionary, versus XLP, consumer staples. And it's very important to note that whenever you're looking at markets, guys, you need to be looking at something like this chart to really see if it's risk on or if it's potentially risk off. Because when it's risk on, you have to generally be looking at rotation, looking at the best sectors in the world, and of course, the best stocks in general. It doesn't really matter what our opinion is of the markets and the economy. It's more important to actually focus on the flows. We've got some excellent charts coming up in today's video to discuss that, including those dark pools. So we did a survey on YouTube and we did a survey over on our X account, and we found with the question of how much longer will the stock market bull run go on for, most of you guys were either in a very short period of time we're going into a recession, less than 12 months, but a few of you actually believe that it will never end. So that the Federal Reserve and everybody will just keep printing money into oblivion. So I kind of agree with both of you guys. But what I would say is it's funny how 1 to 2 years was so much lower. It kind of makes the contrarian in me think, well, maybe that's actually where the problem lies. We're going for a little bit longer still. And that's all going to be because every single one of the firepower levels will be used by the American government and obviously the Federal Reserve. Tax cuts, done. Federal Reserve rate cuts incoming. Problems with inflation in the future, probably going to be there. And on top of all of that, QE. So you've got to remember, we still have a couple of things in the tank. And you might say, but Tom, QE's already been going on behind the hood. You would be correct. It's actually liquidity. And liquidity has been on the improve for the last kind of 3 years, ever since the lows of 2022. So the markets are certainly doing what they are showing, but not necessarily what the media is telling us. So just remember, right now, a lot of people are confused, and the rise of people searching gold, the rise of people searching recession, the rise of people searching bubble is here. So what this usually is indicative of is generally the late cycle of a bull run. And that makes sense because generally you go about 4 years in any sub-bull run itself, which would take us into 2026. So let's take a look at the here and now. There are a couple of things that are happening. One, we got the largest trade ever recorded on VOO, which is a huge S&P 500 fund, back on last week. Now, since then, we've actually traded around this level a couple of times, and it just so happens to be around that really critical zone of course, 6,500. Now, why is that important? Well, it just so happens that this is where we have a pinning effect of huge options that are sitting all over this zone. Now, next week, if you're not aware, is the OPEX. That is the options expiration, the biggest one of the month and arguably the biggest one of the quarter, because most people know that September is considered the worst week or worst month of the year. And actually what statistically tends to happen is after that expiration, we can see sell-offs in markets. But will that be the same this year? Because of course, around that point, we're going to get a most likely interest rate cut from the Fed. Well, let's have a look at what they're doing, not what they're saying. So first up, a couple of big transactions coming in on semiconductors, which may actually be purchases themselves. You can see here TSM going back up now to those all-time high levels and getting a massive dark pool trade on top. Now, it could be that this is a sell, but we've got to remember that over the last couple of months, what's been happening? The market has been going sideways. This is what we call a pit. Now, over the last 24 hours, we saw a big uptick in risk on assets, and a lot of those were Hood, AppLovin, all of these types of stocks that were just included into the S&P, and generally just hype across the board came back over the last 24 hours. Let's have a look at a couple of other things that have been happening. Number one is treasuries are starting to come back alive. Now, you guys know that I haven't been a big fan of treasuries for a while. I've been saying, you know what, they're not a trade, they're more of an investment. You've got to have like multi-year time frame analysis on them, and I still kind of match that. But a couple of big trades came through over the last 24 hours, 61, 44, and 45 all clustered together, and it kind of suggests that there's a little bit of activity. So we'll have a special on this moving forward, and this is of course on the 3 times levered long treasuries position, but there's, I think, a change in the air here. So treasuries will come back into our daily show moving forward into the end of the year. It's now time to start talking about it again. Remember, often we take these things out when they're boring, when they're accumulating or distributing. The reason we do that is because when everybody's on something, you don't usually want to be on it unless you're in early. And then you ride that thing all the way to the sun. However, when everybody hates something and it starts to improve on the charts, that's when we want to be paying attention. Remember, if it's in the press, it's generally in the price. What about the yin? So this is, of course, Chinese stocks. They've been seeing a bit of dip buying in recent times. We've, of course, liked Chinese stocks for about a year and a half now. And you can see here that dark pools have started to come back out. And I think that's kind of notable. In fact, when I look at HSI, which is the Hang Seng, it looks like it's got flow momentum into the positive direction. So certainly Hang Seng does seem to be improving, and that is, of course, a positive sign. Now, you might be thinking, oh, should I get into the market? I'm feeling FOMO. Oh, wow, I need to get back in. I need to run it in. You can probably pump the brakes still. I mean, statistically, we look to be in a very up, down, and all-around market. And although markets can sometimes make a high into the OPEX in September, it's pretty normal for a third year kind of market, especially post-election markets, to see a high right around the middle, as you guys can see here, and then it sometimes sees a bit of a sell-off. Now, I don't think it's going to be a crash because we don't have problems in the bonds market yet, which we are tracking very closely here on the channel, but it does make sense. Remember, we thought coming into year 3, which is right now, that we'd be up, down, and all around. And I would argue that's exactly what's happened. We sold off massively, over 10%. Of course, we thought 10 to 15, ended up getting almost 20. And then we've seen one of the fastest recoveries on record. So, if you actually take the year-on-year gains right now, they're not as good as you would maybe think they are, unless you're looking at particularly some tech. In fact, I just checked gold today, and it was like year gain was like 40-something%. Which is just absolutely incredible. So congrats if you've been on that one, or even silver recently. Now, what about the Fed rate cut? Well, this is probably where things will change. The structure of markets will change as well. A bullish market coming off a Fed cut, it depends on the sectors. A bearish market coming off the Fed cut, especially the next 3 to 6 months, we could be entering into a recession. What the market will do, not what people are saying, is going to be super important. And remember to sub to the channel. We'll track this one very closely together. It's going to be super important to track this as much as we can. What about the Fundstrat's opinion, which is obviously Tom Lee's? Well, he's obviously going with the bullish side, which is that he believes a SEP cut will actually give us a year-end surge. And that is certainly a plausible scenario. Again, it's going to be which sectors are going more than anything else. And I would say we've got to follow the trend. But will it be actually a later sell-off? Now, Wayne Whaley, who brings up some amazing data, has gone through and he's found that when you have a pretty good summer, which obviously it was a pretty good summer, 5% summer, June to August period in the US, then actually the more likely sell-off zone is October. And this is what we get into when we talk about these Q3 periods. We tend to see this kind of August, September, October bring the pain. And it turns out that only 6 of these periods in October are actually bullish over this particular read. Now, I think that's a very interesting statistic, and it actually brings up 23 and 24 again for where the second sell-off was. It wasn't in September, which is now too well known maybe that it is a sell period. It was actually October. But I wouldn't get your hopes up about, an epic collapse or anything like that. Although, take a look at this one. That was 87. that would be pretty nasty right there if that happened. But it is an interesting stat nonetheless. Anytime you're getting a market that is hugely more bearish than bullish in statistics, and that's something I always look at, because remember, the market is rigged a little bit towards the bull end. So when you look at something like a 20 to 4, well, in similar cases where we sold in October, September, whatever, we generally always rallied up. So you can see here that it was a very bullish statistic when it came to generally buying it up. Now, why could this be true? Well, some of it has to do with our favorite analog at the moment, which is the 1998 one. So this is the dip into the rally, into the pit, which is what we've got at the moment, pull back in time, into a rally, which no one expects. Obviously, no Q3 real dampening here, into a sell in January, if we're going to follow something similar to this. Now, this is one of my favorites at the moment. I certainly do like this read, and it does make sense to me with what we're kind of in, the type of market we're in, the type of concentration, all of that stuff. But time will tell whether this really comes through. The other one is, of course, the ChatGPT versus Netscape one. These aren't that correlated, in my opinion. I know it looks like they are, but they're kind of off. But I think we're actually further along in the cycle than that one says. But still a cool thing to study and certainly like it. Now let's talk about gold and crypto. First up, gold, 46%. Wow, not bad. One of the best year-on-years ever for gold. That is exceptional, and congrats if you've been in it. We obviously know gold positioning is going back up, even versus silver, though I still think silver's awesome as well. And we also know that central banks have been holding more gold than treasuries, a change that we haven't seen since the 1990s. Clearly, there's something in the air with people expectation of fiat, and people are starting to lose faith in the system. So what does this mean? Well, as you guys know, I've been a huge fan of this pennant pattern for a while. I thought we'd break to the upside. We certainly have. And since then, we've obviously been pushing. Now, I think 3,700, 3,750 is going to be a key critical kind of symmetrical triangle TP zone for some people. But it does point towards 4,000, 4,200 being a real possibility for here gold. And I've had to upgrade gold a few times. Remember, years ago, we talked about 3,000 and we thought that was an excellent level. As we approached 3,000, the macro side just looked like it was even better. We upgraded to 3,600. We approached 3,500. I actually upgraded it again at that point to 37, 38. And now we have to upgrade it again because I think it's actually looking great on technicals. You know, I think the thing here is you might say, well, Tom, shouldn't you have said $4,000 a few years ago? Well, you know, based on the gold cycling, yeah, I mean, I could say 4 to 5K is probably where I would think it tops for this cycle. However, that being said, you change your opinion as you see evidence build. So that's fine, as long as you're not a delusional fantasist. So I would like to think we're not being delusional fantasists here. I think it's a very fair upgrade. And hey, you know, it's my personal opinion. Don't go and do anything with it, but it should be pretty interesting. Now, based on other personal opinions, we've got the man Tom Lee. He's come out with a big one. Obviously, he's a fan of the crypto markets right now. He believes that we could be seeing Bitcoin 200K by the end of this year, which of course is technically the end of the halving cycle. So if it's going to go crazy, hey, it makes sense to go crazy around here. Do you agree with Tom Lee? Let us know in the comments down below. Now, the reason why it's possible, although I was saying about 150, 165 myself, is because, of course, we usually get a dip here, which we're currently in. So remember, we haven't seen Bitcoin break up yet. And then we tend to see a rally. Now, we've got options flow for Bitcoin in the show now, so you'll see what I mean by this in a moment. But basically, yes, alts are holding. That is big alts. That's pretty normal. And it's actually kind of flowing the same way as a normal crypto alt season would. Now, I've posted a little bit about this in the LinkedIn address down below, which is my personal LinkedIn. If you're interested in following me there, I post a bunch of this stuff. But yeah, I talk a little bit more about it there. So what about the S&P? Well, 6,500 is key. This is a critical call wall resistance. If we breach and close above it, because remember the biggest trade ever recorded on VOO is around here. So if we close above this level, then you've got to think the markets are going to keep trying to push higher. It clearly is a zone because we see 6,500 constantly being sold up against. And I think it's probably going to be a catalyst trade. You know, what happens with PPI on Wednesday, which is the precursor to CPI. I don't know why we're getting PPI this week, but sometimes that happens earlier than CPI. And this is going to be the read. So here are the options levels, guys. You can see it is what we call a dull market. And although I still expect Q3, maybe it's October now based on the stats we're starting to get. Although I still expect volatility and, you know, generally poor performance from the indices in terms of compared to some of the sectors, the thing here is it just doesn't have a sell on it. You know, there is, you might say, but Tom, it's overbought on the RSI and the MACD and the divergence and this. Yeah, I know. They're always going to be like that when you've got a chart that looks like this. However, it hasn't broken 63.50, 64, you know, key gamma levels, and it certainly hasn't broken 62. So it's still in an upward trend. It is what it is, guys. You know, it is what it is. S&P 500, 65, call walls everywhere. You can see people starting to stack 64.50 into the expectation of the PPI and, of course, the CPI events. So they're clearly getting a bit of activity. NVIDIA, a little bit of resurgence. Actually, other semis doing better. But I think this one's got a key chart on it, so we'll look at that later on. And Tesla, 350, too much for it again over the last 24 hours. Needs to get through 350. My opinion on Tesla moving forward is literally Elon, because he's, you know, incentivized to do this, is just going to talk about Optimus 5 billion times and just post bitches about it. So we'll see how that goes, but it is clearly over for the car side, and it is just Optimus, Optimus, AI, AI. That's how the market's going to get excited. Remember, the market likes a good story more than it even wants to see the profit sometimes. What about IBIT? Well, you can see here that this is a critical zone for options market. Now, this is the most traded option in terms of the Bitcoin ETFs. And you can see here, we'll start tracking this. So if you like this, let me know, comments down below. But there's clearly a couple levels. One is 70 moving forward. And then, of course, this 64. Now, because we're trading just underneath 64, you'll see on Bitcoin, that correlates pretty well, I think, with the 113,500 level. And that is a higher high. So we'll look at that later, but this is why you marry up options, flows, all this type of stuff. We love doing that on the channel. Talk about it in our courses as well, because it's super important to, of course, follow what they're doing, not what they're saying. So what about risk on? Well, did we just see the change to risk on? NASDAQ versus SPY kind of pointing towards that. It's been a while. I mean, we've been sitting for a little while. I'll show you what I mean by this. You can see here, Palantir, MAG, the stocks that took us up kind of weakened. Then the S&P 500 rebalance happened. Hood went crazy. AppLovin went crazy. Absolute wild moves. And you'll notice kind of double bottom pattern here, but it has just touched the bottom end here of the channel. So interesting next couple of sessions. Probably going to find out post CPI, I think. And semiconductors continuing to hold the base. So as we said, a lot of people are saying head and shoulders here. It's not a head and shoulders till it actually activates. So this is still in an upward trend at this stage. And the only bear chart we could find was NVIDIA. But I'm really interested to see this break above 173. If that can happen, then it's probably going on the bull side. So it kind of seems like here that maybe Wayne's data is correct. Maybe it's more of an October sell. We obviously want to be looking more at the flow, but I still think rotation has been the story of the last 3, 4, 5 weeks. And we've been discussing that very heavily here on the channel. And the reason is Russell has been beating SPY. We've seen different stock sectors start to do better. And just remember, there's always a lot more opportunity. We're also seeing yields fall off. 2%, the US 2-year falling down. Again, I think it's going to move heavily off the inflation expectations. And the fall of kind of people's expectations of treasuries and fiat. I mean, the amount of people out there basically just making videos about how no one trusts the system is unbelievable. I don't think I've ever seen it like this, maybe during a real crash. So considering we're not actually in a crash at the moment, it's bizarre in some ways how many people do not believe the system. Now, I'm not going to argue whether you should or whether you shouldn't. There are concerns, of course, in the future on many different ways, because there's really only 3 ways this ends. 1, everyone pays back their debt properly. Yeah, I know you're rolling around on the floor laughing. That's not going to happen. The other one is, of course, inflate away the data, inflate away everything and say, well, the debt's less now. We've inflated it away. Really hurts us, the general people. And then, of course, the other one is just default. So which one? That's going to be the question. We'll answer that hopefully soon and look at the most plausible scenarios. But let's have a look here at gold. It is absolutely rapidly expanding, of course, once considered, and is the oldest currency in the world. I love gold. And I think it looks pretty good on the charts. So still, remember, take your symmetrical triangle distance. It's going to give you a 3,700, 3,750. And then maybe we see a little bit of selling there. Silver is kind of similar. It's strong. Daily's new high close. It's melting up a little bit here at the moment. Even if it sells, it does seem like there's kind of like a buyer of last resort there. What about US oil? Well, it fell. It's gone up a little bit on OPEC. Hasn't broken through 63.75. This is a political trade. It's very difficult. But 63.75, I'm starting to smell it out in the air with the oil, but I think it's more going to be, a post PPI CPI trade for a new activation. Hood, yeah, all-time highs basically. You can see here up 15.83%. The last 24 hours was really about hype stocks coming back. And we also saw AppLovin. I'll just show you guys here. Look at it. AppLovin is McLovin, because this thing is 547. It's going up big time at this stage. So do I chase these? Personally, no. I think there's just ratio is all you're doing in trading and investing, and really making sure you're on the right things. But you cannot deny it's a new all-time high for 2 of those leaders out of the previous period. So again, we're watching semiconductors most closely now. Tesla, 350 is too much, so we can't go to 380 until we close above that. Chinese stocks still bouncing, still looking okay, so that's not too bad, guys. US 2K, you can see on the path to 2440 at this stage. So again, seems kind of bullish. And NASDAQ struggling with that large Q sell level. So is it up? Yeah, I mean, the trend is still up at this stage. Clearly, it's a pit. Is it going to be a distribution where it sells or an accumulation? I always say, what's the current trend? Daily's up, weekly's up, monthly's up. So you've got to kind of say, well, the flow is still in the bullish case. But I still think volatility is here. And look, this is exactly what we expected. You may say, well, this is not volatility. But that's a 4% sell. This is another 3% sell. So they are happening. This is what you would expect around this time of year. And actually a pit, that is a sideways action that then goes into a rally, they often are stronger rotational plays. So it can lead into it. Let's now take a look at Bitcoin. Not going to bother with Ethereum, XRP and stuff. They're all sitting sideways at this stage, guys, which is fine. But you can see here this clear level, 113,500. That's going to be kind of that IBIT level with the options as well. I think there's a lot of action going on there. That could signify potentially the sell-off's over, because this is a pretty big squeeze level after this particular shooting star or big pin bar candle. At the moment, though, the bears are in control. So this is actually one where the bears are in control of this market. And again, maybe for bear sellers, you want to see this market underneath maybe like a 109K, and then that could signify 104 or even 98. I would prefer it goes 98. I know, I'm bullish on it, but it would just make more sense to previous cycling periods. But I'm sure a lot of you will say, no. I just wanted to go up again, dude. Yeah, I get you. But the thing about it is this is a pro-crypto administration. You've got to realize that. So it's all that matters in the crypto world right now is government policy. That seems to be the main thing here. And that will probably be continuing the story for the rest of the year. PPI, guys, on Wednesday, 8:30 a.m. and then CPI on Thursday, 8:30 a.m. So pay attention to both of those. If you enjoyed today's video, then please remember to subscribe and smash that like button. And in general, I guess the big thing at the moment is to focus more on the trends. Come from the abundance mindset we talk about here on the channel. There are always new opportunities. Okay, gold and silver are rallying hard. Yes, that was a great entry a few weeks ago, but don't worry, there's other ones. Could be healthcare next. Healthcare is looking better on the charts. Could even be an energy pickup that's coming soon. We'll see a buy-in. There's always a new one. So don't worry about it. And even with semis, you've got to remember they've burnt off 2 months of time. So we'll find out whether this thing breaks to the upside or not. For now, I'd be a little bit cautious about saying that it's absolute risk on again. But yeah, I think we might find out over the next couple of sessions. Thanks so much. Bye for now.